I'm trading a Robinhood account from $3,000 all the way to $1 million and showing you every step of the way how I get there. Today, Wednesday, September 17th, we closed at $33,485 in the account. We were down $323 on the day. And even at one point, we were down $1,800 on the day, but we did not panic. We wanted to see what was going on with the FOMC meeting today. There was a lot of volatility. The Fed ended up cutting rates 25 basis points, which was widely expected, over 97% odds that they were going to do that. But more importantly, we heard from Jerome Powell what his thoughts are on the state of the economy, as well as future rate cut decisions. And I cannot express this enough that what he said today gave me even more confidence about the theory I've had going into year end, where we are going to have a really bullish move. I think the S&P 500 is going to push to 6,800 to 7,000. I think we're going to see a really strong move on a lot of these stocks that we're entering into. And I'm going to give you not only the detail, the wording, the phrases that he used to make me feel that way, as well as the different positions that I think are poised the best to take advantage of this move. And I'm going to cover it all here in this video. Now, on the week, we were up 8K, so still doing really well. And last month, we're up 12K. Last 3 months, we're up 24,000. So still really strong in the account. We did get trapped on some positions, like Alibaba went crazy, just ripping to the upside, $167. We sold some 149 calls when it got to 146, and we're underwater on those. And then NEO had like this crazy move even through dilution, and we sold 6.5 calls last week, and the stock just went up like 23% through an offering, which is extremely bullish. Just seeing how the price moved, but we were able to roll this position to October, $7 calls, but almost 2K on options and 1,300 on shares. So not bad overall on this position, but we might lose it in October if it's still over $7. But nonetheless, it'll free up capital and we'll be able to enter into some other positions. BABA, this was also an interesting one. We have some spreads that are fully in the money. We're going to end up selling these positions for over 300%. And then this 140 call, I did cap it with the 149s, but you can see here, it's just been on this crazy move to the upside. So we might try to roll this one as well and just free up a little more upside on this position, but we're going to be taking profit on the spreads that are deep in the money. And then Tesla, HIMS, Nebius, Robinhood, Unity, Apple. Let me just go into some other information on the Fed first, and then we're going to hop into the charts because these things are just ready to go. So if you aren't already, make sure you guys join the Discord. There's like a bunch of information in here. I post all of the trades, entries and exits, as well as on my main options portfolio, long-term portfolio. There's like some trade setups, as well as there's just a really good group of guys in here who are constantly posting information on different stocks, giving you ideas on things that might actually be beneficial where you can enter into a trade. There's some ideas in here that I don't even know about and people suggest it. And then I'm like, that's a great idea. And I enter into a position. So make sure you guys join that. Just a fair warning, be careful of any imposters trying to imitate me or other members. They might direct message you and ask for money or crypto or all these other stupid things, copy trades, whatever it is. Just ignore it. They're scammers. I will never ask you for money, and I will never ask for your personal information. So just don't answer DMs from people you don't know, even if they're pretending to be someone else. Just keep it all here in the actual server. So let's get down to what the Fed said today and why I think this is so bullish. So the first thing that Jerome Powell said when he got on, of course, was good afternoon. He always says it. If you ever want to take that call sheet poly market bet. But nonetheless, he said this 25 basis point cut was a risk management cut. And really that stood out to me because the way that he was phrasing this as he was speaking was that they didn't really have to cut rates 25 basis points. That's what he was implying by that. And the market is in this really interesting spot where we have inflation, we have jobs starting to slow down, the overall market is still running and pumping to the upside, earnings are really well, but investors are looking to the Fed to understand the state of the economy as well as the rate at which they provide liquidity into financial markets. The 25 basis point cut is technically bullish. It is easing financial conditions because it lower rates and money flows into risk assets as well as in the real economy. When you lower rates, it's easier to borrow and lend. It's cheaper money for businesses and for people. And so that stimulates economic activity. And that's why it stimulates the economy. And that would be bullish for financial markets. However, if Jerome Powell came out today and said, I want to cut 50 basis points because the job market is dying and there's fears of a recession and all those things, the market actually would have probably sold on that information because it would have spooked investors. They think, oh my God, we're going into recession. The market's going to go into a bear market. We're going to drop 20, 30%, whatever it is. But he didn't say that. He said, we're just cutting these 25 basis points because we don't really know what to do. Like the job market is at 4.3% unemployment, which is well within historical norms. GDP has increased. Inflation is slowing or stalling. The risks to inflation are lower than April. And the tariffs, which they thought would be inflationary, are being eaten by U.S. importers. So it's not being passed on consumers. We're not actually seeing an uptick in inflation because demand is dropping in the broader economy. But what he's really saying here, and it's just basically saying that the recession chances and what people might talk about on Twitter or on X or other platforms, they're starting to panic. They're like the job market or mortgage rates, like they're just freaking out about like, you know, the housing market stalling, the economy's, oh my God, it's the end of days. They're starting to panic. But Jerome Powell is not panicking. He's saying we don't really even have to do this 25 basis points cut. We're just doing it because, I mean, like, whatever. Like Trump's asking for 100 basis points and all those things. That'd actually probably be bad for the financial market at this point. It would send the wrong message. And even for the future rate path, there's no blessing of that path yet. So they're remaining very, very neutral, just taking day by day, waiting to see what the data looks like on jobs and inflation. And as that information comes in, then they will make more and more decisions. And just to hit this home with some of the headlines, and then I'm also going to explain like the logic behind this. But yeah, quarter point, it's not going to make a huge difference. 4.5 to 4.25 is not a big deal. It's not going to move the needle on anything. It's not a bad economy. That really stuck out. It's not a bad economy. Earnings are doing really well. Q2, Q3 will probably be really well. AI backdrop environment. Companies are raising guidance. There's a lot of deals going on. IPOs are coming. So overall, there's a lot of risk on in the markets. And then you also see here that most people were in support of this cut. They didn't feel they need to move quickly on rates, which is important. They're not panicking about the economy. Could think of today's as a risk management, and the risk of higher inflation or less. So really bullish all around from Jerome Powell. And the reason why I'm really bullish into year end is because the longer they delay more and more rate cuts, it kind of creates a floor on the price of the S&P 500. So let's just paint a scenario where the market starts to drop in October. Well, the market will start dropping, but at some point people are like, well, they're going to cut rates again. They're easing the market. Like that's going to pump financials, pump markets. Why am I like being bearish? Like the economy isn't going into a recession yet. Jerome Powell just said he's not worried. There's no real recession threat. They're going to cut rates again. That's all bullish. So the market's like in this weird limbo right now where as they continue to keep doing these small little rate cuts and Jerome Powell doesn't flip into like the job market is just accelerating into the trash can, the market's just going to keep pumping and pumping. And the longer that they actually push off those rate cuts and the longer that he doesn't freak out and he just remains neutral, that means that the recession is not near us. So you can take more risk. You can just continue to believe and play breakouts, play high quality stocks. Things are just going to keep pushing to the upside because they're slowly lowering the rates. That's going to pump markets, move money into, that's going to provide liquidity into financial markets. And any sort of selling in the market is going to be short-lived. I hope I explained that well enough, but it makes sense in my mind. But nonetheless, HIMS we're really bullish on. We even got people pumping this on Twitter, I suppose, one of our members. Unity Software, this one's still interesting. Rate cuts for October and December are still on the table for 25 basis points. So those are the most likely outcomes into year end, 2 more cuts. So we'll just see how things go. But right now, really bullish, definitely into, this holiday season. I think we can have a crazy run. And then even here on futures, you're seeing them start to push to the upside. So let's hop into the chart. But earlier today, we did have the ripper on the upside on the rate cut. Then there was a fake out. This is pretty common on FOMC. Then it actually came back down to even this lower support level. It bounced where that rejected before. It flipped this to support at 654. We bounced, and then we closed flat. Like, it was basically just like a nothing burger kind of day. But looking at the extended markets, you see that it started to rally after hours, and then you're seeing that here on futures, right? Like, you're seeing everything pushing to the upside. I think small caps are still going to make all-time highs at some point. Every other index already has. I think Ethereum is going to have a really strong move now that it's over 4,500. We got the first rate cut out of the way. This is probably going to push to 4,800, break through that, and then break all-time highs. Bitcoin also holding really well. Did break out of like this falling wedge. Had a couple different fake outs, but now it's starting to push out and up. So really bullish on crypto. And then, of course, Litecoin, I talked about in my last video. I think that's a really interesting setup as they approve ETFs in October. But let's just go down the list. There's a lot of really high quality setups here. Apple is going to break over 241 at some point. I think after hours, this stock sold on the Apple event, but there's really good things going on with Apple into year end. Even Tim Cook, he's kind of like a mastermind in a way. He started showing up in the White House, sucking up a little bit to Trump. But he's also meeting with Jensen and Mark Zuckerberg for dinner. I don't know. We're just seeing these different headlines with Apple, but nonetheless, they're working closely with Gemini and for their AI, maybe partnering with them to add it into Siri. And then, of course, a lot of people are buying the new iPhone, the iPhone Air, the Pro, the iWatches, the new AirPods. That's on people's minds, and retail will likely try to chase this stock as they have Apple on their minds into year end for the holiday season. So really bullish here, 241 to 247. That's the next zone here. And then above that, we're trying to get to that all-time highs at 259.95. And if we can get over that, which I think we will, you can definitely see a more aggressive move, kind of like how Google and all these other Mag 7 stocks have made all-time highs. ABCL, there's this small play in the account. It did break out of this downtrend. Had a bit of a sell today. A lot of stocks did. There was just a lot of weakness. But it hit 480 yesterday before dropping back down to 455. I just want to see it hold 455, have another go at 480, try to flip that level into support. And then we can have that move to over $5, which is where our contracts are headed into January. So really bullish there. ABCL is more of a small cap biotech company. And then AMD, this one's a bit interesting because it is immune to NVIDIA in the sense, or rather it's immune to the fact that China banned NVIDIA chips. And that's also why Alibaba had such a strong run. But AMD is breaking out of this downtrend and can move towards that 173 level. Hopefully might reject a little bit there and start moving back towards this 187. Now, it hasn't broken through all-time highs yet. I think AMD is a solid bet. There's just so much going on with AI still. I think we're still in the early phases of AI. And over time, this stock is probably going to push towards $300. I mean, if you're just willing to hold it long enough and close your eyes on it. But short term, I'd be looking at these two levels. And a lot of people have been asking about NVIDIA. It's actually starting to form a bull flag. Even with the negative news today, it had that big drop. But I still think if you have long dated contracts, this will eventually break out of this bull flag. And once it does, it's going to make new all-time highs. You can I guess a cheat sheet to see how like a move might actually happen. Say that this does not, in a bull flag, the measured move is the high and the low point of it. So sometimes you can measure it by the flagpole, but in this case, I would measure it by the width of the bull flag. And so because we have two different reactions here on the top and bottom, so far, say if NVIDIA turned around here in the middle of the flag and pushed and broke out somewhere up over here, then the measured move technically would be up to like 197, which is the high to the low of inside the flag. But if you're looking to actually enter into this trade, buying on the lower trend line is a good entry, or buying when it breaks above and holds above. You could either buy on the break or buy on a retest and then hope it pushes to the upside and momentum traders step in. So that's what I would be looking for on NVIDIA. Alibaba, not much to say here. It's just going crazy. It filled that gap that we talked about that formed years ago. I do expect it to slow down a little bit, although China overall has been just running and running. They've been stimulating the economy over there, rate cuts, all those things. So who knows where this will stop. Eventually, it probably will try to push towards 200, 208. But right now, I'm just kind of in profit-taking mode. I think it's going to at least have a pullback where maybe I'll want to enter into again. Amazon, we are long this position. It did fill this gap previously. It broke above, kind of chopped around a little bit. Didn't have too good of a day today, but it did bounce. It did fill one of the gaps, bounced out of this gap, almost got a complete gap fill, but nonetheless, I do think this will push over 233 and into year end, especially with people like ordering a lot on Amazon. I think, Amazon does usually pretty well into year end, as well as a lot of other retail focused stocks. So really bullish here for Amazon. I think we're going to push over 250 by the end of the year, probably more than that. BMNR, this is the Ethereum Treasury, Tom Lee, Fund Strat. This is going to continue higher because I'm very bullish on Ethereum and crypto into year end. I think Ethereum still has a lot of room to run, and that also means that SBET, which is one of the stocks in the challenge portfolio, is also going to start taking off to the upside. We got the low volume node here at 21. I think more than likely we'll push towards 24 and 30 by the end of this year. So really, really bullish here. It can make some pretty good money on that. And then Tesla, I mean, we talked about this one of the best setups in the market. When it broke through this downtrend, it was forming this larger wedge. Usually when you see these stocks that are kind of coiling in an uptrend like this, it's very bullish price action, and eventually you'll have that explosive expansion move to the upside. And that's what happened. Not to mention Elon Musk bought a ton of shares in this 370 to 390 range. He bought $1 billion. Okay. He hasn't bought shares on the open market in Tesla since 2020. So very bullish, very unusual. This area is going to act as a strong level of defense. And so that's why we're just kind of waiting. We bought these 360 to 365 calls, and we're up 400% on them. But I wish we would have bought a bit higher near 400 because we would have just made so much more money. But we did make a really sweet profit on this whole move to the upside. It's probably going to consolidate here that I talked about, and then eventually probably keep pushing towards 460, maybe even new highs. We'll see. They're rolling out FSD in Australia, supervised FSD, and I think that with the amount of deliveries actually starting to show some improvement. But when you look at autonomy, Tesla's going to own that, right? They're not only are their cars autonomous, but they're also trying to build all the robotics with Optimus. And as they get more and more data using AI, it's just going to be off to the races for Tesla. So Maybe it's not a car company. Maybe they are the company of the future. We'll find out. But really hard to bet against Elon there, especially when he's buying the stock and he has a cult following on the internet. So really bullish. Definitely can see that one push towards all-time highs. It's just kind of silly at this point, like talking about any stocks, because it's just like, yeah, just buy it. Like buy everything. That's pretty much my mindset, especially after FOMC today. We're going to get that soft landing narrative. But looking at Unity, there was actually a good amount of flow today, and I can show you here. Decent amount of flow on the 50 calls for September 19th. So there was some decent bets coming in there, but more on the 55 calls. There was like over 100K on the 55 calls for September 26th. There's a lot of put selling as well for this week. So still really bullish here. A lot more on the options chain. The options chain is just growing and growing and growing. And eventually we know what that means. We're going to see a move higher and higher. And I even talked more recently about on Twitter, which I can just go over here really quickly. Unity might actually be a solid fundamental play. We're seeing more and more people on LinkedIn who actually are customers of Unity using Vector, which is their ad tech platform. And this person, I think is Admirable Games, they started using Unity ads, and they started moving a lot of their budget from Meta and Google ads to Unity. They actually see not only is there a better cost per impression, so it's lower, but there's better quality leads. People are more engaged on video games than they are on social doom scrolling, like what you see here. So quality over quantity. So we're seeing companies actually shift their ad spend into Unity. So we'll see. And then of course, like you can see it here, the amount that's being shifted and towards Unity, as well as Josh Chanley. This guy is always just posting on LinkedIn for impressions and clout. But he started talking about Unity's level play. It has a unique edge, better retention, something even that Max can't wall off. So there's just like these other little tidbits of information that we're getting from customers that are showing us that they're actually getting better usage, better quality, more value from Unity's software compared to AppLovin, their biggest competitor. So maybe this company is like a fundamental turnaround story. I'm bullish into earnings, which come on November. I don't know if this is the exact date yet, but November 6th. So I might actually hold through earnings. The best position right now is to hold like December and longer dates, I think, slightly out the money or even further out the money, up to 65 calls. I actually called my broker and asked for them to add strikes up to 100, just in case Roaring Kitty tweets, the stock could go up over 100, 200%, especially with the options chain, how loaded it is. But right now, Roaring Kitty is sitting pretty. He does not have to tweet. He has January dated calls he could just hold. He could maybe even exercise those calls. He can just hold his position, and as long as the price is continuing higher, he's not incentivized to tweet, because that's like a little ace up his sleeve. He can pull that thing out whenever he wants, pump the stock, pump his position, get all that exit liquidity, and make over $1 billion in profit. I do think at this point he is going to pull it off. We've just seen a lot more retail, a lot more people on social start to pick up this stock. It is starting to make more noise, and I think that the company won't be as quick to dilute as GameStop has in the past, or AMC, and this can definitely have a very explosive move through this low volume shelf towards 50, 58, 65, 73. If you're looking at any shorter dates, 50 is the level to start taking some profit. You know, like if you were in a bunch of different dates and positions for Unity software, you would look at taking profit based on your expiration at these different levels, right? So like I would take profit on 50 if I was here, you know, these different dates, and then, you know, look down, right? So you see all these different dates here. It's just starting to take profit. So you should already be in this position. I've been talking about it since May or April. Yeah, the Unity software, that's pretty much a lock at this point. let's get into HIMS, and then maybe I'll cover one or two more. But HIMS has these really explosive moves. Short interest has been increasing. It's like 42 to 43% short interest, which is really unusual. That's a really high short interest amount on a 202 million share float. And so the threat of a short squeeze is actually very high. We had a false breakdown previously. You can see that HIMS, I'm still talking about Unity. HIMS has these really explosive moves to the upside, 202%, 162%, 50%. It's already rallied like 20%. It had a bit of a pullback earlier the last 2 days because of the FDA warning that was sent to them. They received a letter around like marketing language as well as like how they advertise on the Super Bowl. But that information is not really that big of a deal. It's immaterial to earnings. I still think HIMS is going to have a crazy move to the upside. The levels I'd be looking at, especially on shorter dates to take profit, this 57 level is a bit of a smaller level. 60 to 64, that range is like a pretty good area, especially with this previous trend line that you're seeing here, where you could take at least some short dated profit. And then, if this thing really does start squeezing, kind of like how open door is because of the short interest, you could see this thing squeeze to all-time highs at 73. This thing could even push over 80, even all the way get up to $100 per share. It has done it in the past on a lot of hype, a lot of optimism, a lot of FOMO, a lot of squeeze. I think HIMS is also a really interesting position. Nebius, this one broke out. This one we bought into the last couple days this week. It was kind of hanging out. It broke out of this little downtrend. You saw it come back down and retest that level on the FOMC meeting. It held that level, and then you had a really strong bounce in the end of day. And I think this one is also up after hours quite a bit. So this one is turning out to be a solid trade where we're going to make some good money on this one. It's probably going to rally to $100, maybe even get over that towards like 115 to 120 by the end of the year. Really bullish there. It just didn't pop enough on the Microsoft deal, so we're going to see some more upside there. Zeta, this one's going to keep pushing to the upside, this 2273 level. It's just been calling to us the last several weeks. We've been consolidating for a period of time after this nice pop on earnings. 1955 has filled in enough. We can leave this area now and push towards 2273. If we do break out of this upper trend line, this thing is going to start pushing to $26 and then even potentially 28. We could even get back up into the 30 range by the end of the year. So really bullish on Zeta. I really like the CEO. He's running around the stock floor exchange, New York Stock Exchange, just like giddy that earnings went really well. And this company is going to benefit a lot from AI, and their customers are starting to migrate away from third-party to first-party data, and Zeta has a great platform. It's only $5 billion market cap, a little less than that, and it's growing, I think, over 40%, and it has a really high rule of 40. So overall, really bullish on really any of these. Obviously, you don't want to chase things that have already run up a bunch. Like Oracle just had a crazy monster move on earnings. You don't want to chase that. You want to look for these high quality breakout setups where price is consolidating and it's ready to make that expansion, that really explosive move to the upside. And so that's what I'm really looking for on all of these stocks into year end. So the opportunities are out there. Jerome Powell just gave us the playbook. We don't have to worry just yet. Just look for a lot of risk, and I think he'll do well into the end of year. So I hope you enjoyed this video. I know it was a lot. I'll try to post as often as I can. Make sure you guys hit that like and subscribe button, and I'll see you in the next video.